Thank you for checking out Fieldman Rolapp Associates Municipal Market Update for the week of August 23rd. We typically record these on the first and third Monday of each month, but this month we've had a little bit of a disruption in our schedule with the offices reopening, with travel, and with client meetings. We've been traveling quite a bit out there seeing folks and opening offices, and so our MMU schedule has been disrupted, but you can count on it on a regular basis again. Sorry for a bit of the disruption. I'm joining you from our San Francisco office. There's a few things in the news I think it's worth highlighting before I jump into the municipal market update. The first is a little more than a week ago, the U.S. began evacuating Afghanistan, and been quite disruptive. You can't turn on the news right now without seeing just some very sad stories about kind of what that process is like, how many people can get out, what's stopping them from getting to the airports, and really hope that things calm down there. But really that's probably the number one headline right now. There's an article in the Wall Street Journal titled "Remote Work May Last for 2 Years, Worrying Some Bosses." So this is an interesting one where I think employees have looked up and said, without getting ready for work, without the commute, they can save money. They can oftentimes add more work hours to their day, so feel like they're getting more done on a kind of per day basis. Where employers, I think, are looking up in some cases saying the trained workers are probably doing very well, but how do you create that teamwork approach and also make sure that the people who need some mentoring type activities get that in the remote world? Because I think we all recognize in the remote world, it's very structured. You don't get some of that personal advice that you might otherwise be able to either just see or give along the way. So there's this balance, is how do workers and employers find the balance that you can get that mentoring type activity, teamwork type activity, but still get the extra productivity you might get by avoiding some of the hassles of getting dressed in the morning and going to work. So then that's out there. But another thing that's been limiting office reopenings is that the spread of the Delta variant and infection rates being up. One of the things causing that is that not everyone's gotten their vaccine. And so this morning, Pfizer or FDA approves Pfizer COVID-19 vaccine for people 16 and older. So hopefully this is a step that will make those who have had a vaccine hesitancy consider it. And I think what the hope here is that if the FDA has a formal approval instead of an emergency approval, it'll be deemed safer. And like I said, hopefully that increases vaccination rates, which will make us all safer. So with those three headlines, let's get into our MMU. So on our first slide, we have the historical MMD going back to 2005. Those gray bars represent the range of the MMD for each one of those years. And so we have years 1 through 30. Then the red line represents the MMD as of 8/20/2021. Pretty much since I've been doing this, that line is near the bottom, but a few things to focus on is the 1 year. Look how low that is. 1 year loan for 0.06, and then go all the way out to the 30-year at 1.5. So still very, very low. So some investors with AAA would be loaning money at 1.5 for 30 years. So I think they're really banking on that both federal and state tax exemption to bill a little money out that long for that type of rate. So just to put those interest rates in perspective a bit, we looked at the 5 year or 5 years ago, 1 year ago, and currently. The red line represents 5 years ago, so a bit higher. The two green lines, the lighter one is current, the darker one is a year ago. I highlighted that 1 year MMD, and you can see that's just a bit below that dark green line. And then for the rest of it, the green line is a little bit lower than our light green line. So a year ago, most interest rates were a little bit lower than they are today, other than extremely short maturities. So what's driving this? Well, there's been a lot of demand for municipal bonds. And what we're seeing here is the inflow into the municipal bond funds. Other than that sell everything rally, when we all shut down businesses and schools and other government activities when we all recognize the spread of COVID-19 in the United States. There's been inflows into municipal bond funds. So you had, this is demand. You see a lot of demand for municipal bonds. Let's check out supply. Here's supply. So 2019 is that red line there. You can see a bit lower volume. And then once again, the two green lines are 1 year ago and currently. And so you can see that dark green just a little bit above where we are this year. So another year where there is a reasonable amount of volume, but not enough to absorb all that demand and move rates up. So you continue to see that demand keep rates low. So what else are we looking at? We've oftentimes compared the 10-year Treasury to the MMD, and here we have that 10-year, and you can see that 10-year Treasury has yields a bit higher than the MMD, and so we've seen this trend for some time now, and it reversed itself from a while back, where investors really were focused on having U.S. Treasuries, a lot of liquidity, even if it's the same rating. I think folks felt more comfortable having U.S. Treasuries over municipals, but not we're not in that same situation now, where investors are very eager to invest in municipal entities. Now here we have some upcoming economic data, and for the last year or so, as we've been doing this MMU, it's also almost hard to focus on upcoming economic events, because there was so much noise out there, and then the COVID-19 had stats that were so hard to compare year over year. With the existing home sales, I think this is a really important one. In our business, the areas that deal with new development have been very busy, and we've heard that from a lot of others. But you are seeing signs in the news that there might be a peak, or there might be a slowing of the increase in demand, where you see there's some talk about individuals not being as interested in buying a home further away from their employer, knowing they might need a return. And so there's some uncertainty there. Oil prices, those definitely up. As a consumer of financial news and read a lot of things about online, on social media, I've seen some pictures of oil prices at the gas stations now or currently compared to where they were a year ago, and are higher. And so I think consumers are certainly recognizing the increase in the cost of oil. So kind of to monitor those inventories is also very good. So those are just some things I wanted to highlight for you. On our next page here, we have our Fieldman Rolapp team. I encourage you to reach out to any one of them to ask them for additional information on the things we talked about. And also, one other thing I want to point out is, if you recognize team members on here and you want to work with them, give me a call. We are looking at hiring. Fieldman Rolapp has positioned itself well, and we are looking to grow our firm. So would be eager to take that call and see if that's an opportunity for our firm and for you. So thank you for your time. I will see you next week, since we recorded this one off schedule. Take care. Thank you for joining us.